So, welcome back to another module. In this specific one, we will be covering a couple more examples when it comes to combining all the trade criteria together. So it is the most exciting stuff, I would say, when you get to finally piece everything and build the story understanding. Now, if you're still a bit stuck with something or specific complements, do go back first before you watch these videos, just so that you can get a clear idea of what's going on. So you probably did notice actually in the previous module that we are covering the trades. With myself, of course, I'm just going to be covering a couple of other pairs. Pairs you're probably not familiar with. You can see it on the screen, actually. It is GBP-CHF. All I'm going to say is just give it a chance if you're not already familiar with this one. It is what we like to call like a lit pair. I believe a lot of us actually, I know the educators, we do actually trade this. We love it. Before I was also someone that I had no idea it even existed. So yeah, without further ado, I will get straight into it and you'll realize why GBP-CHF is actually a lovely pair. So let's bring up the chart for GBP-CHF and you can see a gorgeous looking chart and a gorgeous purple box known as Asia range, as we like to call it. So the first question we must ask ourselves is actually, is Asia range complete? Now, what you're probably seeing on the screen may be familiar or maybe not when it comes to the lower bar of the times. So we do actually use UTC +1/2 depending on, of course, the time change. So right now it is UTC +1 in the month of January. So if you are watching this at a little bit of a later date, do ensure that this was UTC 1 at the time. It usually ranges from UTC +1, +2, or GMT, so UK time zone. So we do recommend try to stick to this and have your trading view chart settings set to these UTCs or GMT, because it can be a bit tricky to follow up when we're mentioning certain time numbers. Again, it's entirely your decision. If you'd rather convert it, go ahead. Do whatever you feel is best. We just recommend kind of stick to what we're doing just so you can actually understand. If you think it's easy to understand, then go ahead. Do whatever UTC you prefer. I know in America it's like crazy time zones, -6, -8, etc. So, or even Australia, it's like plus whatever, 12 hours. So with that being said, just to keep that note in mind that we are operating on a UTC +1 in this specific module. So without further ado, the next question, well, firstly, is our question complete? Is Asia range complete? It is indeed. I can see that it's complete. It would be 7 a.m. I'm going to draw a gorgeous straight line. Oh my God, that is actually extremely straight. That's probably the straightest line I've ever drawn in any of my videos, so I am pretty proud of that. So that is 7 a.m. and it starts at 11 over here. So next question, identify the build of liquidity. So let's clear the drawings first. Where can we identify liquidity? Now, this is a question where you must obviously go back to the liquidity modules and understand what kind of liquidity are we seeing. Now, let's try to stick to this area, mainly within Asia. Try to identify the liquidity here before we start looking at the other areas possibly here. The reason being is we want to understand the first market intention of the day, hence why we should, of course, then focus on our intermediate vicinity of liquidity, should I say. So with that being said, our liquidity areas within Asia is actually right here. So you can see the formation of these double tops. I know they're not perfect. They don't have to be to the tick perfect kind of thing. The trend line liquidity over here is pretty much perfect, but we have a rough idea of what's going on with liquidity in front of our eyes, so we can possibly expect what our first market intention of the day may indeed be. So what do you think that possibly could be? Keep that note in your head before we start answering the next questions. Think about where we may go first before we then continue. Are we going bearish? Are we going bullish, etc.? So keep that one in mind. So let's answer a few more questions, and that is identify potential POI zones. So in this case, what is our POI zones? Is there POI zones? Keep in mind, this question may not even always have an answer. We may not always have POI zones. So in this case, when it comes to this area over here, there really isn't anything. You could argue this right here. I'll be honest, that is not probably the best zone to choose from when it comes to your SMT understanding that you should also have by now. Probably not the best one when it comes to situations like this, especially that it's super close to Asia range over here. Like if I try to extend that, it's super close, that you probably want to wait it out and actually wait for an inducement as opposed to a limit order, etc. I know smart money traders kind of execute just like that. No hate against anyone there, but just saying, it's better to wait. I would not consider that a POI at all. However, you could potentially think, hang on, maybe that's a POI, right? It's got imbalance, etc. It's got quite nice imbalance. If we measure up that area, it's quite below this part of Asia range anyways. Oh, that's a horrible line. But it could be a potential POI, right? It could potentially be one. So let's just clear that up with my beautiful drawings that we always seem to have. And yes, we have a nice, gorgeous box now and present it. However, this is not complete. This is really, really key. We must answer the question of, let's assess the momentum mitigation aspect in this scenario. Now, momentum mitigation is actually super, super key. I can't recommend it enough when it comes to avoiding situations. When I say avoiding, how do I explain that? How to know what's going to happen and zones to avoid, specifically mitigation zones. How do we know this zone here is valid right now? Well, we don't really. So the aspect of the momentum mitigation would mean if price, say, taps here first, and then, of course, induces high, it's probably valid. However, if it induces high first, takes out this liquidity over here, and then aims lower, right, it may potentially break through. Maybe it gives a reaction like a smart money trap and break through. This scenario, however, only depends on targets. So we need to understand if there's still more targets below in terms of liquidity. In this case, we can potentially identify liquidity points here, over here. So I would, of course, then go with case one, meaning price will have to induce bearish first to then at least have a target high, which is this area over here. However, the other way around, when we've induced high already here, for price to come lower and actually then reverse, as you would expect when you want to take a POI over here, it probably is not going to happen. So I would cancel that one out. Now, I hope that does make sense. Do watch the momentum mitigation video. Honestly, it is actually incredible when it comes to the power of understanding and not getting confused. So that was just a brief example of what I meant there. So in this case, we can't actually decide that. It really is a matter of let's wait first to see what price is doing. A lot of trading is waiting. So in this case, we must wait. So without further ado, again, let's see what price is first market intention is of the day. Perfect. So price does induce high. It has the really nice examples of the vector candles over here. Perfect inducement. Takes out this liquidity here. In terms of this point here, I did mention, I do believe, again, it's a smart money trap. I can't draw a straight line to save my life, but that is definitely not within the range. It would have probably induced by like a minor pip or pipette and yeah, taking you out. So that's why I don't recommend just blindly taking POIs. It's always better to wait and assess the situation. So in this case, we have actually had an inducement high. So we've had our build of liquidity, the inducement high, and now the last step we look for is in fact the POI aspect. However, before that, going back to this question, let's get the pen out again. Going back to this, is this now valid based on our first market intention? Let's think about that one. Is it valid? Probably not. As you can probably see, we did mark up the ideal scenarios for this one to be valid. Price would have to come lower first before it goes, higher, like such. So in this case, definitely not. I'm not sure why I drew a tick there. I think I was just waffling away a bit. But in that scenario, this would probably not make sense and will become actually a smart money trap. However, let's wait for this reaction and try to actually identify a really nice sell entry. After that, we get a juicy reaction, perfect reaction away from the inducement. Now, keep in mind, timing-wise, this is actually Frankfurt Open. I know the timing's not so clear. It would have to be pretty much around here for it to be 8 a.m., which is Frankfurt Open with UTC +1. So that would be Frankfurt Open and not necessarily London Open. Keep in mind, you can use both of those time windows. They both work. It just means London Open probably would mean continuation, and you may not expect your inducement again because you've already had that now in Frankfurt. So yeah, do keep that in mind. You are smarter than a clock, as Reem likes to say. But yeah, with that being said, can we identify even a mitigation at this stage? Possibly over here. You can see imbalance. Possibly. That's a possible one. But again, before that, what do we have? A relevant break of structure. So we do have a relevant break of structure. Keep in mind, we only use it when it's relevant, hence relevant break of structure. We don't otherwise like force it to happen. If it happens, great. If it doesn't, it's also great. Honestly, it really is. You don't have to use structure. It's not king. It's nothing important at all. It just, if you like that extra little confluence, you can use it. Keep in mind, us educators don't actually use it at all. So this is just that little extra key confirmation that you probably might want to use. Now, the question is there potential mitigation entry? So I did mention something, didn't I? So that was this box over here. Looking nice. There's a very small imbalance, but either way, it's a mitigation POI. I'm not sure what I'm doing there, but it's a mitigation POI off here. Right, let's ignore those drawings. They're really horrible. But either way, we have a mitigation. We have a relevant break of structure. We've had our liquidity inducement high. What more could we really ask for at this stage? It's a matter of let's just execute. What's also key to remember is when it comes to the mitigation zone in terms of range, we don't generally like taking huge ranges. In this case, it's perfect. I can tell it's not a crazy stop loss size. However, if it was probably double, we would reconsider because keep in mind your portfolio, your whole account risk management, it's far more important than taking a massive stop loss trade. That's the thing when it comes to Lit. We have an abundance of trades every single day, and that includes the awakening aspect of what you're being taught here. Just one trade a day, or even honestly speaking, a week is more than enough when it comes to raising your portfolio. So keep that one in mind. You do have to be picky. Be picky with what makes sense and not over risking your portfolio or in terms of risk to reward. Enough waffling from there. Let's see if price reacts now. That's a pinpoint reaction to me. If you can see that nice little wick there, that's absolutely perfect. So with that being said, let's just wait and see the reaction. First target would, of course, be the low over here, as well as the trend line. So they both match up because the trend line does actually start from the low of Asia over here. So our first target is indeed the low down here. So let's see if that even gets met before we try to identify other targets. So we have our Asia range low inducement. London Open, of course, does what? It forms the continuation, as we mentioned. If Frankfurt, let's draw Frankfurt Open, induces high, the chances are London may now form continuation. So it's key to keep that one in mind. So clear drawings. Now, next question, is this POI still valid? Because we are almost approaching it. Are we going to take it? Are we going to get FOMO? Are we going to hedge positions as smart money traders do? They take both buys and sells and blindly operate, not knowing what they're doing. Now, I know if you do that, I apologize. I'm not trying to offend you. I'm just saying I was in that situation before. So yeah, no offense there. But it's a key question in this actual scenario, and you probably are wondering the answer. Now, we did mention the momentum mitigation, the scenario, if it induces high to then come low, the chances are if there's no other high target, we're probably not going to actually mitigate here. We may get a smart money reaction, perfect, whatever, but we're not going to get FOMO. So that's really, really key to understand to not get FOMO in this situation. So with that being said, what is it? It's a smart money trap, of course. In this case, it is more so an FFS because it just actually smokes through. It doesn't even give a reaction. So that's better, should I say. Now, the next question we actually have here is there potential for price to go further, so further lower? Now, this is where we then mark up potential other targets. Ideally, yes, you can classify your low over there as your first target. Second target, of course, the smart money trap. I'm not sure why I'm drawing next, but you can close here or just below technically because it's meant to be inducing the entire POI. So the next target would be, okay, is there now a new liquidity target? Have we got more liquidity to induce? Keep in mind, smart money trap is already induced, the low is induced, so we have actually induced quite a fair amount of liquidity. So the next question is there still more in a close proximity? Keep in mind, we're not going to aim for like 4-hour lows somewhere completely further down. We are, of course, trading intraday, and we want you to capitalize the most you can on an intraday basis and not blindly aim on higher time frame stuff. If I just look at the charts right now to the left, keep in mind below this point, we really only have this. That's a nice circle, that is. So with that being said, can we identify liquidity there? Pretty much, as I mentioned, there's pretty clear liquidity. I don't think that's worth even mentioning why that's liquidity. It's pretty clear. So ideally, around here, we can target something like that. Let's try to extend that. It's not a nice drawing. I apologize. I'm not usually the best at technical drawings. So with that being said, let's see the reaction of price. And it's absolutely gorgeous. I do believe it even came below this point here, being the smart money trap. But keep in mind your minimum liquidity target would be actually at this point. If you are capitalizing those extra bit of pips, great. If not, it's also perfect. But keep in mind your risk to reward on this overall trade with your stop loss only being this big, essentially, and then capitalizing all the way down here realistically as well. It's pretty realistic. It's explained pretty well. You have liquidity, you have reason to go lower, and most importantly, you can see the most perfect inducement candles. Price has not completed the inducement at this point here, so we're not going to just randomly guess a reversal kind of thing. We need to have confluences for that. So with that being said, let's just see generally what's going on in the rest of the day and try to understand what to do. Rest of the day is pretty much liquidity. So in this case, of course, you just wait for an inducement and a mitigation to enter. So we have pretty gorgeous liquidity. You can backtest this one yourself and see what happened going into the next day and what you can expect. So I hope that does make sense on GBP CHF. It's picture perfect when it comes to the London Open inducement or the Frankfurt Open inducement, in this case, Frankfurt Open, even the mitigation in Frankfurt Open. We've had the most perfect cycle, the relevant break of structure, inducement outside of Asia, perfect liquidity targets to the downside as well to maximize potential. So let's check out another pair and another day. So in our next example, we are indeed covering GBP JPY on the 5M. As always, we do stick to the 5M for the overview, and then we go down into the 1M for the more juicy stuff like entries. So if we first bring up the chart, that would be helpful. We have got Asia range, and you know the first question you must ask yourself, is Asia range complete? I can tell you it is complete. It is 7 a.m. over here, and it is 11 p.m. over there. Of course, that's an 8-hour window. Now, again, convert that in your time zone. Ideally, stick to the UTC +1 or GMT time zone, so on the European side. With that being said, we've got Asia range complete. Now, the question is liquidity. Where's the liquidity? Now, before I continue with liquidity, I do want to just basically tell you how you can't have a bias. We should not have a bias when it comes to marking up liquidity. You're going to have sell side liquidity, you're going to have buy side liquidity. That's just a general example. What you must do though is identify how strong are both liquidity points. So is sell side more stronger? Let's just mark it up as like whatever, 5 points. And there's like 2 points here, meaning it's not as strong as our sell side. The chances are, depending on where price is trading, like in this example here, price is quite literally trading in that zone, closer to the Asia range outside of the high. So the chances are, if there is a higher level of liquidity there and you've identified valid liquidity, you may induce high to come lower and take out the other bits of liquidity. So it's really key to understand where price is currently trading and if it's near your targets. And that way you have to then put the pieces together of, well, now we've hit target. Are we going to reverse? Is there a reason to reverse? Or are we going to continue, etc.? So keep that one in mind. just clear the drawings for a nice clean screen before we add our liquidity. So you can see the liquidity here is basically these double tops or equal highs, whatever you want to call it. Again, this is drawn briefly. Ideally, even this one over here is also your liquidity, but I'm just marking up the main elements that you can likely see. Again, here we have this nice trend line formation building. So the chances are, as you can see, even where we are trading over here, we may actually induce high above this liquidity point and above our Asia high range to then reverse, take out this liquidity point as well as the low over here. And what's interesting in this specific scenario is the fact of this imbalance. Now, just keep that one in your head before we continue at the right stage of what that could potentially be. So, is there any potential POI zones? Maybe. So what do you think? Keep that one in mind. Do you think that's a POI or do you not think it's a POI? I'll give you a couple of seconds to think about that one. Keep in mind everything you've been taught when it comes to the retail traps, liquidity, etc. So with that being said, maybe not. It's a smart money trap. It's actually not a POI. It's within the Asia range session. The chances are it's not going to hold. Don't get me wrong, sometimes it does hold, but again, if it does hold, that's probably 1 out of 10 times, and the 9 out of 10 times it does not hold. So with our lit understanding, we don't take POIs within Asia, and we in fact disregard them as smart money traps. So you may even get like a reaction from it. It might scare you a bit, might make you close your cells if you have cells up here, but it's key to keep your bias and understanding well set. Just make sure your risk management is on point. Have a break even, of course. If you expect a pullback from the smart money trap, then the chances are it'll smoke through. Now that is the smart money trap understanding. It can, of course, just smoke through instantly and not even give any smart money trader a chance. But let's wait and see, I guess. So again, removing those gorgeous drawings I have, let's actually find out what our first market intention of the day is. So if we speed up a little bit of price action, we can see, okay, price has actually induced a little bit low. It's taken out parts of this liquidity over there. What does that mean? Potentially, if price continues lower, we may aim to find buys. Again, it depends on London Open or Frankfurt Open of what price is doing. Ideally, we want to see an inducement in those time windows and then a mitigation. So in this case, what I can actually still see is price is building liquidity there, right? So it's built more liquidity to the sell side. So this likely means it's a fake move over here because we've got so many sellers over here, and over here that have still held. There's no inducement of any of these 3 points just yet. So this only actually builds our picture much, much stronger when it comes to the fact we've got a good liquidity target and the chances are we can expect an inducement high. But in this case, we're going to wait. Again, there is nothing here for us presenting, so we must be patient. And that's super, super key in trading, as you probably already know. So just building that liquidity over there. Let's see what price does now. Perfect. So what that means is around this point, we had our Frankfurt Open inducement high, meaning prices forming the inducement high. And of course, what we aim for is trade away from the inducement. Frankfurt gave that perfect example. Not really a clear mitigation. Let's just clear that one up. Not the clearest. It probably just missed ever so slightly here to trade into the inducement of where London Open likely will give us a reversal. Why is that? Because liquidity is all taken now. And that's a pretty nice amount of liquidity to the high side. So we can likely reverse, take out the smart money liquidity over here, the rest of this little trend line, the low, and of course, that's pretty much what you can expect, not much more. Keep the story simple and you will actually understand it very, very well. So the London Open inducement, perfect. We're not seeing anything just yet with this reaction, so we do need to wait for a reaction off that. Sometimes price does chop around and it may start inducing higher again. However, within lit, you must wait for the reaction away. That's the only time you can really understand if the inducement is complete and not guess things. So That being said, let's wait for the reaction. Perfect. Within London Open still, we do get a perfect reaction to the downside. Now, the main question we have here is for entries. Do we have an entry? Is there a mitigation zone? Now, in my opinion, or the way I see things, is this would be my mitigation. It's a little bit hard to zoom in, but I take that last candle there. So that grey candle, the last bullish candle before price went bearish. So these 4 black candles, is that 4? Yes, 4 black candles. I take the one before that, usually the last bullish candle, and take the entire candle, including the wick. So that's how I mark up POIs. You can mark up imbalances. Keep in mind, in this case, there's not really an imbalance. I mean, if you really want to be whatever, you've got probably the smallest imbalance there. But again, take a mitigation, not an imbalance always. So in this case, it's very clear there is a mitigation. There's always going to be some sort of mitigation. However, we don't actually have a relevant break of structure. So in this case, we are a little bit limited when it comes to our confluences. So what that probably means is, okay, we've got one confluence down our mitigation zone. It's not amazing, but it makes sense. It's the only mitigation we have left of that POI. It doesn't have imbalance. Keep in mind, it doesn't have to have an imbalance. This is how I always look at POIs, regardless of imbalances. I can, of course, backtest that one a little bit more with your understanding. Just clear that up. So the question is, can we actually still enter? Of course we can. So let's see the reaction. Perfect. It reacts perfectly to the wick of this point over here. So we can enter that trade. And of course, target much lower, expect the trap to be taken out. And of course, these other points, what would that be? That will also be a smart money trap. So that's where it's important to put the momentum mitigation. I always mention that with understanding what happens when kind of thing. This is not going to be valid anymore. We've already had our inducement, which is the most important thing to trade away from. If we didn't induce high first and this mitigation came a little lower, we can potentially trade into the inducement to then take the reversal. Now that is going a little bit more in depth, so just keep that tip in mind in general. Now let's wait for a reaction. Perfect. Definitely getting a smart money trap because we are actually reacting from there. Lots of smart money traders will take that. Keep in mind, most people don't actually have a template for Asia range. So without this colorful box here, it just looks like a normal POI. So this is why it's super key. When you have your template, you're going to see so much clarity when it comes to what you should not take just with a blink of an eye. It's not even actually hard at that point. Without it, it's a little bit tricky. Timing is also super key. Now let's wait for our smart money trap to end. And what do we get? We get a perfect reaction away from our London inducement, London Open inducement, and then our mitigation is perfect for the entry itself. Now this is really nice. So let's actually see the risk to reward we can get on this trade. We have a perfect 8-to-1. Now that's pretty nice, I have to say, for your first trade of the day within London Open. An 8-to-1 is pretty nice, and that's what we achieve in lit every single day on the pairs. Again, going into the adventure is a little bit more advanced. You quite literally achieve intraday mastery with that. Here in the Awakening, you are building a solid foundation with this rule set you have. Now, keep an eye out for the next modules, and that will be on our templates or checklists, and that will give you a really clear guide of what you should be aiming for, looking for, and achieving a solid rule set. So hope that was a juicy session. Now backtest these, identify them yourself, and eventually trade them.